So I want to talk about Nintendo today, most specifically them as a company and their stock price. It's in an interesting place right now. I think a savvy investor should take a close look at Nintendo. I think they should consider where they will be in 6 months, where they're going to be in a year, and where they're going to be in 2 years and beyond. And I think Nintendo has, slowly been positioning themselves away from the Wii U quote unquote fiasco. I think they had their first negative profit quarter or year, towards the end of the Wii U's life cycle. Something to be concerned about as an investor if you've been holding them. But if you've been holding them for a while, you're probably happier where they are now than they were a year ago. So first off, I'd like to say I don't own any Nintendo. I don't plan to own any Nintendo in the next 72 hours or week even. I just not in a place financially where I can afford to do that. But if you're somebody that's looking for an investment and been looking to invest in Nintendo, this could be a good opportunity, and I'll explain why I think so. First off, though, a cautionary tale. If you are going to buy Nintendo stock and you haven't done so before, one thing that you want to make sure to know is it's really not a good idea to place a market order for Nintendo shares. Always place a limit order. A market order is you'll buy it at whatever price somebody is willing to sell it at, and there's different regulatory things in place on the OTC, which is where Nintendo trades. So long story short, don't place a market order, place a limit order, set how much you're willing to pay for a share, for your shares, and that's what you should put your order at. Otherwise, you might end up paying way more than you were expecting to pay. Okay, so Nintendo's stock price over the last little while, it's been up and down. It was coasting around $17, $18 a share for a while after there was a bump when Nintendo sort of first announced that they were going to do some apps in the mobile space. They jumped up to like $25, and then that sort of petered out. It came back down. People were underwhelmed by Miitomo. And the price came back down again to the $17, $18 range right before Pokemon Go came out. Pokemon Go came out, and holy cow, the world blew up. The stock price blew up. I'm not even kidding. Over the course of 3 days, it jumped up like 40% and then continued to climb. It went to 26, it went to 30, it went to 34, it went to 38. And then these savvy investors suddenly, learned that, guess what? Nintendo doesn't make Pokemon Go. They kind of allow Pokemon Go to happen. They have a small stake in the company, that Pokemon company that actually makes Pokemon Go, and Niantic was also, helping make Pokemon Go. So when that happened, suddenly the price started coming back down. So it had hit that 38 high, and then it came back down, came back down. And we're January 1st, 2017, and the price of Nintendo is between 25, 26. I think it's close to the 26 side of things, but technically 25. I'm just going to have a quick look here. So what does that mean as far as investors? Yeah, so we're like just under $26 right now, off of its 38 high. Now, back when the Wii was a thing, at its peak, I think the price was like $86 or something crazy, like super, super high. That was also right before the big crash, the recession and all that. It was $76 just like middle of 2007, and then the crash happened, everything came down. So, we haven't seen it anywhere near that high again. 38 is as high as we've seen. And I think, if a savvy investor is looking at Nintendo now, I'm not a fundamentals person. I'll let you know that now. I'm more of a, I go a bit more on feeling and on the information that, what are they trying to do as a company? Are they succeeding at that? What's their game plan? And there are some things I do like that Nintendo's doing. So let's talk about the Switch. So the Switch is coming out by all accounts in less than 3 months, or in about 3 months, March, sometime in the middle of March. What I like that they've done is, for a long time, they've had the mobile, the DS, the 3DS, the Game Boy Advance, and they've done very well in that space. And they want to continue to do well in that space, but they still want to do well in the home console market too. So the Switch is combining both of those things into one, which is great. On top of that, they're combining both their development teams. So before they'd have, when they make Smash Brothers, they had 2 different versions of Smash Brothers come out, one for the 3DS, one for the Wii U. So when they did that, they had 2 different departments or divisions working on that. So that meant resources divided, takes longer for a product to come out. Now they're combining their divisions, so they're going to just have one Smash Brothers come out, and it's going to be available on the Switch, and you're going to be able to play that on the go or at home or whatever you like. So what does that mean? That means they theoretically should be able to come out with better content more often with this new plan. I think that's fantastic. I think it's a great approach, very smart on their behalf. I do believe Nintendo, although they are stubborn at times, they do think they are right a lot, and they aren't, and then they find out and they're humbled. I think in this case, they have learned from their struggles, we'll say, that they have learned with their struggles with the Wii U, that they need to have more of their ducks in a row. They need to have better marketing. They need to have more resources assigned in better ways so that they can really take advantage of the success that can come. What's another mistake they make? And we've seen this, supply constraints that just happened with the NES Classic. Was that artificial, or was that, unavoidable? How can they, after being, a game producer, a console manufacturer, if you can call them that, for 30 years, and they can't figure out how to make however many NES Classics the public is willing to buy? Either they're blissfully unaware, or they really just can't pump out more of these consoles. I just don't understand. Were they worried that they would have too many and be stuck with inventory? I mean, how much are these things costing? They're probably $5 to produce a NES Classic. I mean, it's a small emulator with an HDMI port, like in a controller. So I have to think that maybe it's a publicity play, in the sense the last thing they want is NES Classics collecting dust on a store shelf. So I could appreciate that they don't want that, because their brand is very important to them, and that makes sense to me. Their brand is very important. They're called the Disney of video games, and that's for a reason. They're very recognizable around the world. And that's why investors get excited when they talk about making apps for mobile devices. And I'll tell you why that's really strong for Nintendo. And this comes again to their brand. So they have a very strong brand, arguably the most recognized brand in the gaming industry. And that is a huge advantage when you're going to go to a marketplace like a mobile marketplace. So you have billions of smartphones and devices out there in the world that could potentially have Nintendo content on it. Compare that to, the Wii U sold 12 or 13 million units. That's incomparable to like billions of devices that you could have on out there in the world. So I think it's very smart that they are embracing that mobile strategy, and investors obviously agree. But it's baby steps. Nintendo's definitely taking their time with this, and it's not perfect. So Super Mario Run came out recently, and it has not been getting great reviews. The sell-through rate, if you will, the adoption rate, people willing to pay the $10 to $14, depending where you live, to unlock the full game, is like 8% or something. So it's making them money, but it's not making them as much as they might expect to be making, or investors are expecting them to be making. Another thing I've noticed that investors aren't really a big fan of when it comes to this game in particular, in the business model that they've chosen to go with, which is a free to try and then buy outright model, is that's a ceiling, that's a limit to how much the average player could or might spend on the game. It's $10 or $14, whatever. That's it. There's no, at this time, I believe, any in-app purchases, anything that's going to cause somebody to go and spend hundreds of dollars where they might on another game. So you got, Candy Crush, you got Boom Beach, you got Clash of Clans. These games people could just theoretically spend an infinite amount of money on. So Super Mario Run is not that. Does that mean that will never happen for Nintendo? No. Nintendo's next game, Animal Crossing, could have unlimited in-app purchases that could generate millions and billions of dollars. That's totally possible. Nintendo likes to sort of try their thing and do it their way and see how that works. And if it doesn't work fantastically, then maybe they make an adjustment and they try something different. They kind of take their time with that. They're not in a rush. They've got lots of money in the bank. They have no reason to be in a rush. So I think when you compare Nintendo to King or Supercell, Nintendo has the advantage of brand awareness. Now, maybe there's a bit more recognition for King and Supercell today, but 4 years ago there wasn't. But they also, it's not just about brand recognition. Brand recognition gets you to the front of the App Store, maybe. It allows you to do a partnership with Apple, and when Super Mario Run comes out, it's bannered across the front of the store. That's not something that's easy for, Joe Blow company off the street to get. Super Candy Cell might have a fantastic game, but if nobody knows about it, it might take a really long time for that to hit critical mass. Nintendo has the ability to get their brand out. And on top of that, they do have a pretty good record for making hits. And that's the other key. You got brand and you've got killer app potential, right? So Nintendo has brand and a track record of making hit games. So maybe they don't have that nailed down in the mobile market yet, but it's still early days. So I feel, going forward, it's going to take a little while, but, a patient investor is likely to make a pretty reasonable return with Nintendo over the next 6 months, 1 year, 2 years. The Switch, we want to see the Switch do well. We want to see lots of third-party support, continued third-party support going forward. We want to see a regular releasing of quality first-party Nintendo products. We want to see our favorites. We want to see a new Metroid game. We want to see, the Mario Zelda game at launch. We want to see all the hits. Probably an Animal Crossing, not only on the mobile, but on the Switch, probably a different game. Maybe Pokemon games being playable on the Switch. So, they can take even more of that Pokemon Go hype and follow it through. So really, I feel Nintendo's in a good sort of turnaround place. They've learned some lessons. I think going forward, they are going to continue to return value to the shareholder. I think they want to do that. They care about their shareholder, but they also care about their consumer. They know they need to make money, but they need to make the consumer happy. They want to give them good, positive experiences. I'm looking forward to pre-ordering a Switch as soon as it comes out. I'm looking forward to playing Breath of the Wild and a new Mario game. I'm probably not going to take my Switch on an airplane. I'm not sure yet, but I'm definitely going to enjoy having it hooked up to my TV and playing it there. So lots of things to be excited about, and they've got to deal with Universal. They're going to be doing a theme park. Like I said, they're the Disney of video games. Well, here they're going to actually get to be the Disney World of video games. So we'll see how that all works out. There's some rumor about VR, that the Switch could just pop into like a head mount, head rack, pop in there, and you'll be able to play VR games with minimal investment. We're talking $300 maybe altogether, compared to like a minimum of like $600 to $800 anywhere else, aside from like a Gear VR situation. So there's a lot of positive potential for Nintendo down the road. Do your due diligence. You know, I'm just giving you a starting point of reasons to be excited about Nintendo. Super old company, been around for 100 years. They've done a lot of good things over the years. I think it's a very, very exciting time. And I think, you know, in the last, 6 months, this is one of the better times price-wise that you could get into Nintendo. I think exactly 6 months ago was right before the Pokemon Go jump, and that was trading at $17, $18. Then it went up to almost 38, and then peaked again at 36, and then it's been kind of hovering in the 30s. And as of today, it's just under $26. Probably a very good time to get into Nintendo if you're looking for a 6 month, 1 year, 2 year investment type time frame. I'll also mention they pay a dividend. I don't think it's a large dividend, but it's a good reason to hold on to the stock. So yeah, do your due diligence. I hope you enjoyed this video. Like if you like, subscribe if you want, comment below. Let's have a discussion. I'm totally into that. And thanks for checking this out.